Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024. Good evening, welcome to the program. I'm Stephen Grootes. Plenty to come. The latest twist, and it really is a twist, in the Fly Sapphire strike, a twist I didn't see coming. We'll talk about that with Kokkie Kooyman in just a moment. Does seem to be a golden opportunity for SAA of all people, though. I've been following the story a little bit around city power billing in Joburg, and this is such a big problem in so many places around accurate billing for electricity. City Power now promising their new system, which will see them do it directly rather than through the city of Joburg as in the past, will lead to more accurate billing. Well, one, I suppose, can hope. Now, the two-pot retirement system a year in. More on that from 7:30 this evening. A statement from John Steenhuisen, the leader of the DA and, of course, the Minister of Agriculture in the government. I'm not going to call it what people call it, but the coalition government, such as it is for the moment, saying that the DA will now vote in favour of the appropriations bill. And as you know, this is the last phase, finally, of the budget. I have to say, and I'll be very interested in hearing from you on this tonight, whether you think it is a sort of sigh of relief that this is all done, whether you think this is just the beginning of more trouble. Are they going to look for more opportunities, the ANC and the DA, to sort of poke each other in the eye, because that's all they seem to be doing at the moment. But what I am hoping is that with a little bit of luck, this goes through tomorrow, there are no problems, and there can be a sort of change of focus. I do think the last thing that anyone needed was another big fight, another big argument, another big dispute, another big poke in the eye of the budget. I'm almost certain we will see all sorts of comments from MK and the EFF and others, as is their right, and they should do the role of an opposition. But it does seem for the moment that the firing last night and the removal, as it was put in the official statement, of the then Higher Education Minister, Nabukhle Nkabane, has sort of been enough. As I said, I do think the DA would look a little churlish, a little sort of small, I suppose, if they voted against the budget process now. I was very pleased in a way. I'm not often pleased to see statements from politicians, but the first sign that this actually is now going to be resolved, finally. Be very good to hear from you on that this evening on 011 8830 702 021 446 0567, and your voice notes, please, on 072 702 1702. What do you think is going to happen to the coalition now after the budget will finally, tomorrow, we'd best still hold our breath, be passed?
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
A twist I just did not see coming in the Fly Sapphire strike saga today. Confirmation that SAA, need I remind you, an airline still owned by government, is going to help run Fly Sapphire flights between Cape Town and Durban. In other words, if you've booked on a Fly Sapphire flight, when you go to the airport, you would go to the SAA check-in counter and end up on an SAA plane. 200 of Fly Sapphire's 300 pilots are taking part in that strike over the rostering system and wages. Kokkie Kooyman is an aviation expert. Kokkie, good evening. I can't remember in our context something like this happening before. How do agreements like this between airlines work?
At times when desperations are existing in between the two rivalries, and I think when the dust hits, sometimes sanity needs to prevail. That we can be rivalries, but when there's a desperation of needs to be explored in this instance. So this is what has happened here. It's not the first instance this happened. It has happened. COMRiC has also done that before, where they have given SAA passengers when they were grounded for technical issues. So it's not a new thing. It has happened before. And SAA also did the same thing last year when there was a strike. They gave their passengers to Global as well as SAMA, if I remember correctly. So it's not a new thing in the industry.
It's a golden opportunity for SAA, right? They're in a sort of regrowth phase. I don't actually know if they run any flights between Durban and Cape Town at the moment, and they should be able to pick up some business.
Yes, indeed. They have applied for the route to be reintroduced. I know for a fact that it's on one of the plans that they have and that they have communicated before. But this is an opportunity for the passengers that have been loyal to SAF Air to now have an opportunity to taste what SAA is offering. Because the truth of the matter is that SAA still maintains the standard that they have always been, the professionalism on board and all the glamour that you would always get on SAA. I think it's an opportunity for them to demonstrate to the lost passengers that have decided to go with SAF Air. But at the same time, I think strategically SAF Air is going to be able to breathe when they are negotiating on the table, when they have a partner here that is going to be assisting them, because they're going to deploy the 320s between Durban and Cape Town, and it would make more sense also on the Johannesburg and Cape Town to deploy 340, 300 or 330, 300 for a larger capacity passengers so that they can reduce the burden that SAF Air has at the moment with the increase of members now going on the industrial actions that we have seen started yesterday.
But glamour is one thing. What it might mean is that a lot of people suddenly get a free drink and a free meal on SAA, something I don't think anyone's ever got out of Fly SAF Air.
Yeah, certainly. I must say that's something that they will actually enjoy on SAA. But remember, SAA's model of operating is to render a service than transporting. SAF Air model is to transport you from point A to B. So they don't have all those things that they have. But for those that are maybe be traveling for business like yourself, if 702 or Prime Media wants to send you to Cape Town, I'm sure 702 or Prime Media will get the value for money because surely you are doing business. So many companies can actually take advantage of that. But then SAA needs to live up to the promises that they are showing off at this opportunity. But I think it has been proven before. We do hope that, they keep up to their promises, and we just want a stable airlines in our skies. And it's important that SAF Air and the Pilots Association or the Solidarity, they agree to some sort of, stability in the industry. Because at the moment, we really cannot afford another disruption within the aviation sector. So that's our plea to those that are negotiating on this impasses that they have.
I mean, if you're in the traffic listening to this, I'll be very interested in your view on my next question. It's 011-883-0702 and 0214460567. Potejo, this is a political question. You have a strike involving a private operator, Fly SAF Air, right? And the strike is in a way going to be broken by a government-owned company. I mean, I can't help but feel if I were the trade union Solidarity, I mean, I have no idea what legal grounds there might be, but I'll be pretty angry. I'll be speaking to my lawyers about something like this.
Well, SAA is on the market to look for extra cash wherever they can get it. If they can find anywhere there's a hope to make money out of, they will do anything possible. And now this is an opportunity for them, and I think Solidarity, if that they are going to take a serious issue with this, particularly the fact that SAA is government owned, it would not really serve the interest of those professionals that they represent, because SAA is one of those airlines that are paying very well the members that they are fighting for. So if they get an opportunity to get a green light again on the market and dominate the skies again, the better for their members. So fighting them, it would not necessarily help them out, but it will at least give their members much more larger voices, and they will bargain for a better cause, because then that's a South African company. SA is not South African company technically, so what they are fighting for is rightfully for the South Africans, and which is something that I support. I think I agree with Solidarity on that point. I do think that they are not unreasonable with the demand, particularly when SA is enjoying quite a lot of growth on the market.
Sure. Botejo, excellent point. Thank you very much indeed, Botejo Mojapele. So you book Fly SAFair, you end up on SAA. How do you feel about that tonight? 011 883 0702 and 021 446 0567.
702. Stephen is on The Money Show.
6 to 8 p.m.
If you're responsible for a council bill in your house where you live, on your dwelling, I would suspect that you've probably had an argument with the billing department of whichever council you live under. I've had some of my own over the years, and I suffer a little bit of post-traumatic stress disorder whenever I think about it. In Joburg, for the longest time, you've received your electricity bill as part of your council bill. The whole thing ran through the council. Now, in the last week, City Power says it's taking over the billing directly. They say that means they'll be getting more of the money that is due to them. There have been big issues with council spending money that they receive from electricity on things other than electricity utilities. Christo Nichols is the CEO of Utility Consulting Solutions. Christo, good evening. Okay, what's actually changing? What will City Power be doing that it wasn't doing in the past?
Good evening, Stephen. Thank you for being able to participate in this crucial dialogue. So, in answering your question, let me maybe start with this. If you are one of the 175 municipalities in South Africa who received the license from NERSA to distribute electricity, then NERSA encourages you to adhere to a spectrum of fiscal benchmarks, of which one of them is actually your collection rate must be 95%. And City Power is the holder of such a license, not City of Johannesburg. So which means by convention, by design of being a electricity distributor, it's always to the benefit of the actual electricity license holder to be in direct control of the collection mechanism. So that's basically what's happening here, Stephen, that historically the consumer's account was registered with the City of Joburg, and then, for example, the electricity services was outsourced to a company called City Power to do the distribution, collect the readings, and then submit the readings back to the city to create the billing. And I think between that, in that process, unfortunately, a lot of inefficiencies crept in. So the hypothesis behind this is that if the collection mechanism sits within the ambit of the NERSA-issued licensed electricity distributor, then the probability is higher to at least simplify the collection process for consumers, make it a bit more transparent. But that's the hypothesis, Stephen.
Do we know at this stage if the way in which people in Joburg will receive their bill will change? I mean, I can't imagine City Power going through the expense of having to send out individual electricity bills. It would cost a fortune.
That is one of the most important questions at this point in time, in terms of when we look at the collection, it's actually a journey. It involves meters and systems, but most of all, it involves a consumer that need to have confidence in the validity of the bill, the transparency of the cost, and most importantly, they must actually have insight on the different options. City Power, for example, City of Joburg, got approved 8 residential tariffs, Stephen. So which one is better for you? And technically, you should have access to that through whatever mechanism is used to engage you for payment. So one of the questions I do believe that will be crucial is how will City Power actually practically execute this takeover? Will it still be leveraging on a system that sits on the City of Johannesburg side? I know previously or currently they're still using SAP. Or are they actually embarking on introducing much more innovative, simplistic, transparent mechanisms? Will it cost? Absolutely. But I think that's one of the questions we are all that's interested in this domain, in this particular area, looking forward to see how will this manifest. Because the principle we do not dispute, but the execution is normally where the challenge lies.
The real test is whether the bills are actually accurate.
Yes.
And I mean, I hate to put it like this, but I often just think they make them up, frankly. They do estimates forever. You suddenly pay nothing. Suddenly you get a negative bill. Then you get one for R500,000. I mean, frankly, I think that the City Power Billing Department is responsible for more fiction than William Shakespeare.
So look, in all fairness, I think I share this frustration that's verbalized, and it's well founded. However, I think there is the balancing factor that legislatively all municipalities, I stay in Durbanville, so which means I am under the City of Cape Town, and over the holiday periods you'll experience the same, that the bylaw allows municipalities or licensed distributors to estimate for 3 months, but then it must be clearly communicated with the customers. This is actually an estimate because let's say our readers are on holiday or whatever the case might be, and then after 3 months they must have an actual reading. So look, estimations, I think, unfortunately, Stephen, will never disappear from our realities. However, I do believe this is an opportunity to actually address the root cause behind bulk of the billing woes within 175 municipalities, namely to restore the trust of customers again, just in terms of what am I seeing here, and is this really the best option for me in terms of tariff? So that is the hope, that this process will leverage on that opportunity to somehow restore that faith that has been lost along the road.
I can't help but feel that the entire way that, as far as I know, every council in the country bills has just not changed in the last, possibly 100 years. Everything else has changed. I mean, my phone should be able to tell me how much I've used this month. Now, I'm on prepaid precisely because of this issue. I mean, the whole system should change, and maybe everyone should be on prepaid.
So look, first and foremost, the two topics on the table, tariffs and then the digital energy platform that you're referring to. I think, yes, there lies a valid argument. Let's take City Power's tariffs, for example. If you're on prepayment, you'll have this new fixed rate of 200 Rand. And then after that, for about 800 Rand that you've got left, you'll have about 30 units or so, or 300 units you can buy. But there are other tariffs that offers you some interesting options. For example, Stephen, if you bought a battery that can carry the load for a whole day in your house, which is typically between 16 and 30 units, there's now a time of use tariff that you can opt for, and you can charge your battery at R1.94 at night. And during the day, you run your whole house. So which means the tariff options have definitely evolved. The challenge, I think, a lot of customers are just not aware how to practically choose. But in terms of the system, you're 100% right. That is where the biggest reform is required. In the municipalities we are active in, we've actually made a leapfrog already where customers can actually, just because of unused, for example, solar that they might have, we have customers that's trading that against the whole account, for example. So which means there is definitely an evolution in the space of the digital energy platforms that does speak to a bit more future-proofing than what we used to.
Christo Nichols, thanks so much. CEO of Utility Consulting Solutions.
The Money Show.
The markets.
Kwena Maloko is Equity Research Sales and Investment Banking at Absa CIB. Kwena, good evening to you. So IBEX, formerly Steinhoff, I'm just going to call them Steinhoff for the rest of the conversation, selling their stake in Pepkor. Pepkor is doing pretty nicely at the moment. Is this a good moment?
That's right, Stephen. I think if you look at the sort of clothing retail shares for this year, they've had a horrible time in terms of performance, right? We all know the reasons: constrained consumer and top line. But I think if you look at Pepkor's shares, they've done a little bit better, and it's because they have a little bit better growth. The key question for investors had always been, this share sale. We knew it was coming. The timing was the uncertainty. And what this has done now is that it's removed the overhang, so there's no possible dilution going forward. And now the investment community can then focus on the interesting stuff in the business, right? They've got a credit offering that seems to be doing well in this market. They've got a fintech business that's growing quite nicely. So I think from this point onwards, investors are able to focus more on the growth side rather than other factors that are not related to fundamentals.
I'm a big fan of focus. Sasol's production update. So they expect their earnings to be up 20%. Their coal production is down a little bit for various reasons, but their share price took quite a big knock. I think 6% on the day.
Exactly. I mean, when you first read the trading statement, they seem to just confirm that they'll meet guidance. But when you dig into those production numbers, you just realize that in many areas of the business, the volumes are either lower than they expect or at the lower end of guidance. So I think to contextualize this, the share's been really strong since the Capital Markets Day. And while it was a few months ago, nobody sort of expected them to be ticking off milestones. It would have been reassuring to see some momentum building towards those milestones. And that's not something we got in this result. Across the board, you're just seeing lower volumes, and particularly in Synfuels that had the lowest production in 20 years. So again, I don't think the market was reassured. And on a day where the oil price itself is down 2%, it certainly didn't help. And I'm not surprised we were about 5% lower.
I mean, it keeps coming back to what is the longer-term future for Sasol. And they gave a vision of that during the Capital Markets Day, but it's still hard to see.
100%, right? I mean, the long-term vision is made up of tiny stepping stones, and you have to give us a couple along the way. It doesn't help if you have the sort of big jump towards the end. The market doesn't reward you for that. So again, I think we kind of get through Q4 and then we start looking to the 26 numbers and the 27 numbers as we build up to those big milestones.
A cautionary from Adcock. You probably, I hope, know more than I do, but not giving much away. We are in discussions about a possible transaction.
Yeah, and I think that's the big thing, right? It's a possible transaction. There are a couple of ways to look at it. One could be that Adcock is sort of buying something.
Yeah.
I ascribe a slightly lower probability to that. But it could be that Bidvest, that owns over 50% of the shares of the company, is considering a sale here. Right, Bidvest has bought a couple of offshore businesses, Noonan, PHS, and recently Citron. And the conversation we're having is, well, what can they do to sort of unlock the balance sheet and potentially pay down debt? That always goes down quite nicely in the investment community. But it's too early to say because we just don't know what's happened. If you see the reaction, the Bidvest share price jumped about 1% after the announcement. Adcock did about 10% as well. And I think if it is a sale of their shares, what it does for Adcock is that it unlocks their liquidity and puts them on the radar of investors that previously couldn't look at them. But again, too early to tell because they could be sold to an owner-operator or they could be buying something. So we just don't know. We probably are waiting for Bidvest to say something, Adcock to give more color. But at the moment, I think the investors have taken a slightly positive view on what's going to happen.
There's a reason they call it a cautionary. Kwena, thanks very much indeed. Kwena Maloko is Equity Research, Sales and Investment Banking at Absa CIB. Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
Stephen Grootes
Taking your calls
on 011-883-0702.
Well, we know how Telecom would feel about flying SAA on a Fly Safair flight. Mqondisi on the line from Randburg. How would you feel about it? SAA helping out a privately owned airline in the middle of this strike.
I would have no problem with it as a customer. In fact, I'd be very grateful that in a time of industrial action that I have what is fast becoming a really essential service. So, in fact, this whole situation to me doesn't sound like a bad model for how industrial action could take place. There's very clearly financial penalty going to SAF Air as a result of their pilots, or at least 2/3 of their pilots withholding their labor. But at the same time, you've got customers who are minimally inconvenienced. The fact that, this works out this way is one of the better instances of industrial action in the country that I've seen. And long may it continue.
So it transfers the pain to the company rather than to the customer.
Yeah, well, the company is taking pain because we know that Safe's model is not one where, this mimics a lease of sorts. We know that they like to do things differently. There will be a fee for the service that a partner airline is rendering. So it won't be business as usual or profit as usual. But at the same time, customers are economically dependent. This is so vital for livelihoods, for, all sorts of commerce. And so just to cut it off on a whim, is not something that, should be possible in any respect anyway. So I'm a big fan of the partnerships we're seeing in aviation. Even when the SAA had a strike, SA R and I think it was Global came to the party. So it's almost something I wish could be mandated, could be regulated because of the importance of the aviation industry to, the daily lives of people.
No, I hear you, Mqondisi. Thanks so much. All right, so a big fan of the idea. The other big issue we've been talking about tonight, of course, is around electricity billing. Voice notes on that tonight. Over the years, you've heard me ask Wealth Manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
702. Stephen is on X.
At Stephen Grootes.
I'd like to hope that you remember the last time you tapped your phone or your watch or your credit card or whatever it is that you tapped when you were paying for something. Maybe it was the parking machine as you left for home or a quick cup of coffee before your final stretch of your working day. When you do that, so many different things are happening in the background. Your bank is communicating with the bank of the merchant. They're checking you have enough money. They're transferring money from one account to the other. And all of this is happening between people and parties who've never met. And we call it the payment system. It's a lot more intricate than the speed of the process might suggest. It's often nearly instantaneous. Now the Reserve Bank is looking at opening the system up a little, so it won't just be banks who run it. Kokkie Kooyman is the Executive Director and Portfolio Manager at Denker Capital. Kokkie, good evening. For the moment, as I understand it, the people who are really involved in the payment system are the banks. How far can this really be opened up? Can there really be big changes here?
Yeah, you've got the challenges and the Reserve Bank in their article mention all of them, that obviously firstly they want to modernize our system, a bit like what India and Brazil have done. India have now got what you call a unified payments interface, which means all players work on the same basis and anybody can transact or can send money across to anybody else. But as soon as you let non-banks in, then your problem is regulatory challenges. So that means the Reserve Bank has also got to start regulating them because, as you said, if A moves money to B or A is paying for a product that is purchased from B and money changes hands, both parties want to make sure that the right party does get it and that the party in between is value for money and doesn't disappear in between. So there are a lot of challenges there, and the Reserve Bank have tried initially now with PayShap, but again there the banks haven't totally played ball. I mean, Capitec have come to the party with very low cost, so the other banks have basically kept their fees still fairly high. But you almost need the Reserve Bank to step up and do you want to regulate it that the fees cannot be more than X because there is a cost involved. But you're quite right. The more players you get involved, the better, because that improves the competition. And there's an incredible amount of innovation going on in South Africa at the moment on the payment space. But to regulate them at the same time is going to be the challenge.
I mean, you're going to have to bring them in kicking and screaming, I would suggest. They make money out of this. They won't give it up easily. They're banks.
Quite good. Don't be so hard on the banks. But you're quite right. Look, initially, when you set up a system, and just think of something massive global like Visa or MasterCard, there's a lot of, I don't know if you follow the debate on stablecoin that is challenging them as well, with stablecoin payments. But so Visa, MasterCard, and in South Africa, our banks, internationally, banks everywhere, have put in a lot of capital to provide the systems or the rails, as Visa and MasterCard call it, that facilitate all these payments. And initially, when your volumes are low, you bear the losses. But then as the volumes pick up, it becomes profitable. The big challenge in capitalism is when it's an oligopoly, as you've got here. In other words, a few players who can work together, then it's very difficult to let go of that profit. And I think that's where you need an outside player, to come in, or a reserve bank, a central bank, to force them to lower that profitability.
There are some things the current system does really well. So last year on Black Friday, the biggest shopping day of the year, I was one of the many people who found that their credit card had been debited, I think it was about 20,000 Rand, through what came to be known as a hack of Disney, and particularly the Disney streaming service. Because I was able to contact my bank, because they knew what was happening, because they knew where the money had gone, they could know within a couple of hours that I hadn't spent the money, that it was part of a scam. And when I woke up the next morning, that money was back in my bank account. I mean, that is actually amazing. And as much as I can be rude to banks, I'll always be grateful. What I'm saying is the current system that we have has some things that we really need to keep. It still needs to be able to do that and at the same speed.
Absolutely. What you're referring to there is a so-called, you can still reverse transactions. Once you have real-time transactions, you cannot. And I don't know if you recall the whole crypto movement, and it's still on the go, wanted a trustless system. And that was the whole thing of Bitcoin. Trustless meant that there wasn't an intermediary in between the payor and the payee who was necessary. So you could just send Bitcoin from A to B without a middle party. But exactly as you mentioned, the advantage of having that middle party is that middle party takes responsibility of a payment that was hacked or something that does go wrong. And often they have to take insurance to cover themselves against big hacks, but you have got that middle party. So I think that's going to be the challenge for the Reserve Bank. Look, the other objective they really want to do is to take cash out of the system, out of society. Cash is an incredible cost to society in terms of the safety. But the problem, if you want to take cash out of society, then you need digitalization. You actually need, Leon Schreiber is working towards that. You need people in the far out areas also to be able to have an identity that's digital, and you don't have to every 3 months go and KYC yourself, because once you've got a digital identity, then that stays real and online and on time. So there's a lot of things I think the central bank, the Reserve Bank, is trying to do, and if they get it all together with the government and getting digitalization, obviously, remember, for digitalization, you need better electricity, you need Wi-Fi that's available the whole time. But it's a massive project, and I think we're definitely on the right step and on the right route, but it's going to involve all the players to play along, and maybe the Reserve Bank to coerce some of the players.
Kokkie Kooyman, really appreciate the time. Thank you. Executive Director, Portfolio Manager at Denker Capital. Over the years, you've heard me ask Wealth Manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024.
So when you're doing the shopping and you're in the frozen food aisle, I don't know if you've ever made the mistake of buying vegan sausages when you were looking for pork, or worse, buying pork sausages when you were looking for vegan. I live in a house with a vegetarian, and I learnt a long time ago to check what I'm actually buying. But there was a time, about a year ago now, when government, and I'm not making this up, made it illegal for someone to sell a product called a veggie burger or a veggie sausage. They wanted to go and grab things off the shelves. I noticed they didn't try that with McDonald's. someone who claimed that they basically said that the product name, like a sausage or a burger, was being stolen from the meat industry. Finally, it seems sanity has prevailed. New regulations were gazetted on Friday to sort all of this out. Donovan Will is director of ProVeg South Africa and a veteran of what happened last time. Donovan, good evening. I mean, I remember the fuss the last time. Now there are proper regulations about labeling food. What do these regulations actually spell out?
So these regulations are a lot more sensible than the previous ones that were proposed. Like you said, they wanted to ban words like burger and sausage and nugget. These regulations do take a step back, and what they're going to be doing is regulating the use of the descriptors in terms of telling people what these alternatives are trying to mimic. So, for example, we see a lot of packaging at the moment that will use the word chicken but just spelt differently, or bacon spelt differently. All products that are called chicken-style nuggets or chicken-style burgers, and these regulations will outlaw that. And also they prescribed the minimum amount of protein that's in these products. So these products will have to be at least 9% protein to be able to present themselves as a meat alternative.
Okay, but that does mean you can sell something as a veggie sausage or a soya sausage or something like that. You can call it a soya sausage.
Yes, the shapes have been allowed. I think that was pretty common sense. And now what we're talking about is just whether or not we're allowed to call something what we're trying to mimic. So obviously these products, in many cases, we have burgers. You have a chicken-style burger that mimics the taste, that mimics the texture of a chicken burger very closely, to the extent that some people can't actually tell the difference. And now we won't be able to call it a chicken-style burger. We'd have to come up with some other descriptor.
As someone who represents this industry, are you satisfied with how it's been done? I mean, is it a reasonable compromise to you, or do you think they've given into the meat industry too much?
So we do think that they've given into the meat industry a little bit too much. We do agree that there was need for some regulation around this. We can't have a situation where people are misleading the public, and we don't think that is the case. But there are some products on the market where there has been room for confusion. And what ProVeg was asking for is just that we make sure that the packaging is very clear. So, for example, if you want to call something a plant-based chicken-style burger, so this is maybe a crumbed burger that tastes like chicken, it looks like chicken, that the word plant-based is the biggest. You can have a little descriptor like chicken style or chicken flavor, like we do with many products that have no chicken in them, and then the word burger or nugget, whatever it is. And so if we have, the type font is 3 times bigger to say plant-based or to say soy-based, and then the chicken style is nice and small. But unfortunately, we don't think it's useful for consumers not to be able to have that descriptor. So, for example, if we have a chicken-style nugget, if it tastes like chicken, looks like chicken, I think it makes sense to call it chicken style or at least chicken flavor. But if we can't do that, how does a customer know what it's meant to be?
Sure.
If we just call it a southern fried nugget, it doesn't actually tell the customer what that flavor is going to be.
Even if we're much further south than the south they mean.
Yeah.
I'll be interested in your view on this if you're listening to this on 011 883 0702 and 0214 4460567. The vegetarian industry generally, Donovan, I mean, I get an impression it's growing. Is that accurate?
So we're definitely seeing more and more products coming out. And what we're definitely seeing a lot of is more big players being interested in the space. So we do hear occasionally, we hear people saying, the plant-based movement or the vegan movement's not growing as much as it used to because 100% vegan restaurants aren't proliferating. But the reality is we're seeing every retailer has these plant-based products. Every major QSR has them. You can go to Steers, Spur, Burger King. They all will have an alternative product on the market, and that continues to grow.
Donovan Will, thank you so much. Director of ProVeg South Africa. You with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024. Well, plenty to come in the next hour. Don't forget personal finance tonight. The two-pot system a year in, the impact that it is having on you, on people that you know. I don't know if you've actually sort of looked at it, if you've done it. I'd love to know what your experience has been. And also, have you got into the habit of just taking the money out? Do you regret that? Do you know someone maybe who has? I'd be very interested in hearing about that from you. Also, of course, going vegetarian. As I say, I've lived with a vegetarian for a very long time, but not really, dare I say, my cup of coffee. It'd be good to hear from you on that too, actually. I know some people do it and say it saves them a lot of money. Actually, quite hard sometimes to get the right amount of protein without meat. You can eat eggs. Some people are fine with fish. Some people don't like any of those products at all. Vegetarians often end up eating quite a lot of cheese. I'd be very interested in hearing your views on that on 011 883 0702 and 021 446 0567.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
How would you feel if you were working at ABSA right now and were one of the group of people who knew what was going on when the CEO, Ari Rautenbach, he's left, of course, now, seemed and was accused of basically sidelining one group of managers in favor of another particular manager? Race was kind of involved in all of this. And ABSA themselves, and there were several stories today that ABSA have been investigating who leaked this information, went to the Sunday Times. Now, a lot of water under the bridge since then. As I say, Rautenbach has left the bank. There's a new CEO, etc., etc., etc. Now, I have some sympathy with the people who manage ABSA. And if you're Kenny Fichler and you're coming in as the new CEO, you're probably thinking, I run a bank. I cannot tolerate people leaking private information about the management of the bank. I mean, can you imagine being the person in charge and that happening? How do you run a bank, which is all about privacy and information and financial information, in that kind of situation? On the other hand, I think you know me well enough to know by now that as a journalist, my sympathy is often with the leakers. Imagine what South Africa would be like without leakers. No Gupta tapes, for example. I mean, we would be a completely different country. We'd be a completely different corporate environment too. I mean, I think it was, if I recall, a leak to Business Live, to Business Day, about what was going on at SPAR and their SAP implementation. I mean, there are plenty of examples. But imagine where we would be without leaks. I mean, what would have happened? So I have some sympathy with ABSA and their management. They're a bank. They're going to have to do something. This is going to run and run and run, be bad publicity the whole time. I imagine they're under pressure from all sorts of sides to get to the bottom of what actually happened, and so the process will go on for ages. But how would you feel if you were one of the people working in ABSA, could be one of the people who maybe is seen as a suspect, and now you find that actually there's this investigation? Be very interested to hear your view on that tonight.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
I hope your company hasn't been affected by this. The chances are that it probably has at some point. Did you know that Telecom's fraud is now costing us around 5.3 billion rand a year? I mean, think of that number for a second. Think of what happens if someone does a SIM swap, basically takes over your SIM card. Suddenly gets very easy to get into your online banking profile, things like that. The Communication Risk Information Centers, run effectively by our big telecoms companies, they say the number of cyber attacks has more than doubled in the last year or so. The CEO of the Communication Risk Information Center is Advocate Thokozani Mvelase. Thokozani, good evening, and thanks for your time on The Money Show. The level of fraud, this kind of fraud, no matter what kind, it really is at a very alarming rate now, isn't it?
Evening, Stephen, and thank you for inviting me to your show. I fully agree with you. It is an alarming rate, and what we've seen is continuously increasing because of various factors, which most of them has to do with the digital fraud and how the scammers and the fraudsters have evolved over time, and the technology evolution, and the issues of identity theft as well, which further exacerbate the rate of fraud that we're seeing.
Which categories are going up the quickest? I mean, what are the sort of more riskier things? What are the biggest problems that you're seeing right now?
So what we see now is what we call subscription fraud, where we have a lot of syndicated groups that are able to actually purchase services from our members using fake information, but also targeting vulnerable citizens who probably either unemployed and looking for work, who have a valid bank account, a valid ID, pay them money so that they can be able to assist in the processing of some of the applications that they do from our operators. But also what we see is that some of the fraudsters use what we call a SIM box machines to bypass the revenue sharing models that exist within the telcos and the international world. But also what we see, the issues of the digital scams that are every day changing. But what they do is how they enable the fraudsters to be able to either access your bank account or just scam you to be able to pay them money, release money into them. So we've seen quite an increase around this, which we call them social engineering types of fraud.
We tend to measure these in terms of rands and cents, but actually maybe we should measure this in terms of lives ruined. I mean, people are driven to despair, worse by this.
Yep, I agree with you. Imagine you, whether you're unemployed or not, and someone says to you, I'm going to pay you 5,000 Rand if you help me facilitate a fraud. One thing that you forget that by doing that, even if they pay you whatever sums of amount, you are complicit to a crime. And that means your life will be ruined. And that's what we're dealing with as well, which people don't understand. Or even if they do understand, they don't understand how big is the impact for them participating in these organized criminal syndicates.
You effectively represent the telecommunications industry. I mean, you're obviously doing, I presume, quite a lot to stop this. I mean, it affects your bottom line too.
Yes, we do. I think as the industry, which is one of the reasons why COMRiC was formed, is that we need to collaborate and share best practices as the industry for crime prevention initiatives, which amongst others include about the training that we need to provide to our staff, but also how do we do some detection mechanism in terms of identifying some of these threats before they even happen. And we use the various forms of data just to make sure that we can run through whatever we see in our platforms on a daily basis and identify the various syndicates that are happening, but also identify instances where our network is under threat from even the issues of cybercrime that we see globally happening now.
I kind of want to say that as a consumer, we're not doing enough to protect ourselves. We leave ourselves wide open. I mean, I know people who still don't have, double verification for WhatsApp and things like that. You must have the PIN code for WhatsApp. But I can also, maybe as I get older, understand slightly better how frustrating it is. You've got a system that works. Now you have to do this. Now you have to do that. I mean, just keeping up with passwords is enough to make me want to cry. But I suppose in the end, we're just not doing enough to keep ourselves safe as consumers.
So there's that element, but also as the industry, we're saying probably various sectors need to collaborate in driving this awareness, because we can't assume all customers are aware of what needs to happen. And like I just said, with the digital evolution and the crimes keep on changing, new security measures are implemented. We need to constantly communicate the message of awareness, what customers should be aware of, what should they be doing. COMRiC, collaborating with other sectors, even in the financial services, will be doing in the next coming few weeks and months to make sure that we drive the awareness to the customer, because that's a big gap that we've identified. We can't do it in a silo way. We have to cross-collaborate as various industries to minimize the crime impact.
I mean, the one thing that's so obvious here is that people are making money out of this. Otherwise, they wouldn't be doing it. And they're clearly making lots of money because they're working very hard at it.
Yeah. It's one thing I always say, that criminals are on the business of committing crime. We always playing catch up. So there is an incentive for it, and we need to find a way to arrest that incentives and any loopholes that exist in various systems that enable this type of crime to happen. And that's what as a sector we're looking at. And we always get blamed around the issues of pre-recard SIM cards, and we always say there are interventions that are on the way so that we can make sure that we clean some of this database and make sure that people don't fall victims as a result of, I always call it, those customers that we can also not be able to identify on our system because of the fraudulent means they've used to access our network.
Advocate Thokozani Mvelase, thank you so much, CEO of the Communication Risk Information Centre.
702.
702.
Stephen is on X.
At Stephen Grootes.
So I don't know if you've had an argument with your council about the value of your property. And this has suddenly become very important because the amount of money you're paying in rates and taxes is coming off the value of your property. And I know plenty of people who found this incredibly frustrating, and they feel that there's sort of the little guy taking on the council. So I laughed a little bit to find that Sandton City, yes, Sandton City, was valued at 10 billion rand by the Joburg City Council. And obviously its owners went, not a chance, and off they went to court, and they've entered an arbitration and all the rest. I think they went to court in the end. Now, I mean, Sandton City's not very far from where I work, and it's very nice, and everything sort of works, and they famously never had load shedding and all of those things. 10 billion rand sounded like a lot to me. Now, maybe 10 years ago, if you looked at how valuations were moving in Joburg, Sandton City would be worth 10 billion rand by now. But now, when you look at what's happened, how property prices have gone down in most parts of Joburg or just been stagnant for such a long time, I think you'd probably say it was never going to be worth 10 billion rand. Nice to know it's not just us that has these fights with the council. Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
The Money Show, Africa Business Focus.
Rotendo Ndwingwe is founding director at Tribe Africa Advisory and author of Rumble in the Jungle Reloaded. How's it, Rotendo? We keep talking about the incredibly high cost of coffee and the incredibly high cost of cocoa, all the things that we like. And yet cocoa farming seems to be in crisis. Is financing a big part of the problem in Africa?
That's true. Good evening, Stephen, and a good evening to your listeners. And just to give some context, Stephen, just bear in mind the cocoa business or industry global is a $60 billion industry. And then to also highlight further, what's the challenge at the moment in regards to this great opportunity from a global perspective and cocoa farming in Africa, which is obviously led by countries like Cote d'Ivoire, Ghana, and Nigeria. So the big challenge is on one side, cocoa, and I'll give you an example of Valentine's Day. In the US alone, $26 million worth of kilograms of cocoa are consumed per just that week. 26 million kilograms. And I think the European market imports about 1.6 billion kilograms of cocoa per period of time. So there's a huge demand for the product. But on the other side of the continuum, from an Africa perspective, Stephen, there are only about 2 million SME largely farmers that produce cocoa in the West African region. And a lot of these farmers do it at a subsistence level. And the challenge, therefore, is that a lot of these farmers rely either on child labor, and another extent, they're also trying to diversify and leverage off women from a gender perspective. So there's a huge challenge with regards to scaling and getting finance so that they can go to the next level. And that's where the problem is. And as a result of this, there's a potential shortage because there's not enough financing capability in the West African region to scale to meet the demand. And that's the problem that you have from a market perspective. Over and above this, you've got volatile markets, you've got limited access to finance, as I've highlighted, and obviously leading to a credit challenge. So that's the dilemma that is there, and potentially that's the report that came out recently highlighted that problem, Stephen.
And the DRC, they've signed this major mining deal with Cobalt Metals. It's backed by Bill Gates and Jeff Bezos. I mean, these are people who know a thing or two about money.
And the reason why Jeff Bezos and Bill Gates are involved, and this is absolutely critical because that's where the catch is. Obviously, these are big tech billionaires, but the specific company Cobalt uses AI and advanced technology to locate mineral deposits. So that's why they're involved. And obviously, the specific mine that they're investing in with regards to their offering is called Monono Lithium Mine, Stephen, which is one of the biggest lithium deposits in the world. So again, it just shows obviously obviously, we know DRC has made a big deal with the US, and Donald Trump has been involved in taking a lot of glory for that. But over and above that, there's a lot of sort of means to this madness with regards to them actually doing this, because it's now opened up a path for tech billionaires like Jeff Bezos and Bill Gates teaming up, and then obviously capitalize on this opportunity with their company. The investment is I think over a period of years is ranging from $150 million US to $1 billion US. So it's not small change, but it's quite significant. And over and above this, they're actually taking another step, Stephen, in terms of trying to digitalize the DRC geological surveys held at the Royal Museum for the Central African Republic in Belgium. So this is a big step in terms of them investing in Africa, obviously looking in terms of return on investment for the US. And it's an interesting opportunity that has turned out for Jeff Bezos and Bill Gates, thanks to the Donald Trump deals that have come to pass. So an interesting saga there.
Yeah, I mean, the book that will be written about that entire deal is going to be fascinating. Coffee in the Central African Republic, quite tricky at the moment. They've had all sorts of issues.
Yeah, at one time, the Central African Republic, coffee was the backbone of their exports, contributed to about 50% if you follow different research bodies. At the moment, obviously, diamonds and timber are leading, but I think the big challenge that is there is that coffee, which can make a significant contribution, obviously from an agricultural perspective, from an export perspective, risks in terms of decreasing with regards to production, 4.2% year on year. So Central African Republic, as you know, Stephen, has gone through a lot of political and civil crisis and wars over the years. So at the end of the day, things like coffee farming can make a huge input with regards to taking the economy forward. The challenge is that, again, similar to the coca story in West Africa with a lesser quantum, is that there's not enough financing and investment to scale that part of the world because of the risk involved, although the opportunity is quite significant. So on one side, great opportunity. On the other side, obviously, the risk is too high, and they're failing. They're looking at the year-on-year growth in terms of production of coffee going down, which is obviously quite a sad note.
You've been telling us about Ethiopia Stock Exchange, trying to liberalize things a bit, trying to basically get their economy going. And the Kenya Commercial Bank, they want to go into Ethiopia. Is it going to happen?
So Kenya Commercial Bank has made big strides with regards to investing in Ethiopia. And, Stephen, with me, these are the kind of stories I like, whereby it's an African company trying to invest in another African company and just goes along the whole AfCFTA trend with regards to industrialization. But the challenge, though, is Ethiopian is making it very hard. The par value of a banking industry in Kenya is probably about $3.2, whereas in Ethiopia, it's about 7.2. So they've made it very expensive in terms of getting a foreign bank to buy shares or make an acquisition in Ethiopia so that they can scale. At the moment, there are only 4 banks that have more than $1 billion of capital. That includes CBE, it includes Dashan, Abyssinia, and Awash. So these are the 4 banks that have got the right capital. In total, believe it or not, Stephen, Ethiopia has probably got about 20 banks, including Standard Bank from South Africa and Eco Bank and Equity Bank, which are smaller. But I think the big challenge here is Kenya Commercial Bank is saying, guys, we want to come in, we want to invest, we want to do this through an acquisition. But Ethiopia is making it very demanding and very expensive, and which is the downside. So hopefully with time they'll open up. But again, there's huge opportunity here for an African bank to play into another market and extend it and grow it and capitalize on that.
And very quickly, Danone, they are going to expand their presence in Morocco, Algeria, and Nigeria.
Yeah, Danone already has got 9 factories in Africa, 3 farms, employs about 6,000 people, and it's wanting to expand in Morocco, Algeria, and South Africa at a later extent. But ultimately, there's a huge opportunity. Obviously, Danone is a French company, a big multinational, does 32 billion turnover per annum. So there's a great opportunity. It's another great story of seeing another multinational going on the African continent, and they are quite aggressive as they want to increase in terms of their footprint on the African space. So another good story to track and see. And hopefully when we share yogurt, Stephen, we can remember this story with regards to where it all started from.
Oh, I remember the last argument about flavours. Rutindo Hundwingwi, thanks very much indeed. The founding director of Tribe Africa Advisory and author of the book Rumble in the Jungle Reloaded. You at The Money Show, just gone 7:30. Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
The Money Show.
Personal finance.
Well, John Manyike is with us this evening, the head of financial education at Old Mutual. And I wonder, we're a year into the two-pot retirement system, and I wonder if you've dabbled in it, if you've considered it, if you've actually gone and done it and taken some of your money out. You might know people who have. You might know people who've got into the habit of it. You might have got into the habit of it. So we thought an important moment to just have a little bit of an assessment of the two-pot system 1 year in. And I'd be really interested to hear your stories, what you've heard about it, how you feel about it, maybe what you've done, maybe what you regret doing, maybe what you're incredibly pleased that you've done on 011 883 0702 and 021 446 0567. The voice note line open as well on 072 702 1702. John Manyike, it's good to talk to you again. Good evening.
Good evening to you. How are you doing, Stephen?
I'm well, thank you. I mean, there was so much discussion about the two-pot retirement system. It's almost a sort of unique reform here. And, I mean, I don't know if there are any other examples of people who are doing it. I think there are one or two who've tried something similar. So, I mean, your first thoughts a year in, how's it sort of changed the South African retirement picture? And obviously, a lot of people have taken money out.
Look, for me, it's a mixed bag. You know, on the one end, one can argue and say the two-pot system is working in a sense that in the long run, it will improve preservation levels. That's the one end. On the other end, there's an issue with people accessing their retirement savings early, to the extent that even if there is some level of preservation, but that level of preservation is not adequate enough to sustain people in their retirement age. So we are likely going to have people preserving, but we are likely going to have more people retiring into poverty, which is the sad reality that will hit us when that time comes. In fact, I would even add and say, I expect that there may be some people, given the trends that I'll share with you in terms of the people who are likely to withdraw from what we are looking at, is that we might even end up having a situation where there are people who are getting a retirement annuity from their retirement fund, but that amount might even be smaller than what people who are getting SASSA are receiving from the government. Because I don't think it has hit the chord that these early withdrawals are going to hit us later in life.
So one of the reasons this reform was brought in was that people were resigning from their jobs to access their pension. I mean, that's a terrible thing to do. I would like to think that on the positive side of this has stopped that from happening.
Yes, you're right. It has stopped that from happening because, I mean, if you resign, yes, you can access whatever was there, the old money. In other words, whatever money was in your retirement kitty prior to this reform. But going forward, and it will certainly limit you. But for me, you know, Stephen, it's more like a small blanket during winter. So you have to decide whether you cover your face or whether you cover your feet. So hence I say, yeah, well, at least we can say people are going to preserve. But if you still preserve, but you're still going to come out on the other side, even poorer than one who's actually getting SASSA, we really need to ramp up the level of financial education and to create awareness about the risks of these early withdrawals.
I remember the fuss, the queues, the reports we were getting from the finance companies on the first day that people could access. And I mean, you know, there was such differing estimates of how much money would come out of pensions. And in the end, I mean, what I sort of thought at the time, and I don't know if this has been shown to be true or not, was that so many people are so desperate for money, and I can completely understand why, that basically people would take whatever they could out of the system. Now, that hasn't necessarily happened, I hope. But what we do know is that quite a large number of people have already claimed twice. And that must show the level of desperation in some ways.
No, absolutely. And I can tell you now, even those who are withdrawing, they cite different reasons why they are withdrawing from the funds. I mean, if I were to look at just Old Mutual alone versus what SARS is reporting, and I think for the period from inception of the two-pot, I would say at least up to the new tax year, I think we know that the SARS would have processed claims worth 42 billion. And this is specifically on the occupational retirement funds. We haven't even touched on the other related products such as retirement annuity. And Old Mutual would account for just under 4 billion of that 42 billion for that period. I mean, if you start looking at, when we look at, for example, the retirement annuity from our different divisions, those who are in our Mass and Foundation cluster, I mean, when we looked at that, we've had about 92,000 claims, with an average claim of about 3,400. So the amounts are quite small. When you look at those who are more your affluent customers, your middle income and so forth, we've had about 55,000 claims with an average claim amount of about 9,000 rand. So it differs. But the overall number the average number for the occupational retirement funds, the average claims there amounts to about just 12,200. It's not a lot of money. It's not like people are taking money to go buy cars and all that. And I think when we start going deeper into what sort of reasons are people advancing for withdrawing, and I think you will realize that it's not necessarily, the money is not withdrawn for the purpose that the two-pot system was designed for.
Okay, yes, no, I think I get you. So there's been quite a lot of financial education around this. I mean, as this sort of went through the process, we've all been talking about it as it became law, as the reform started and all the rest. And I would like to think that people who are paying money into a pension have actually gone through a process of understanding what it's for. So is there a failure of financial education that so many people are taking it out? Or does it just, again, another reminder of the desperation?
Look, for me, it's an issue of, it's also a case of one being conflicted, because even if you know the right thing, I mean, we know that too much consumption of sugar is not good for our body, right? The same goes with alcohol. But does it deter people from consuming? Not necessarily. Because, at the point at which a person is facing their reality and they have to make a decision, but at least they're making a decision fully aware of the consequences of their decision. I think the sad thing would be if people were to continue to make these decisions without appreciating that, because there are people, by the way, who have decided, and I'm quite keen to share with you what the reasons people are citing for withdrawing. There are people who are saying, no, I won't withdraw from my two-pot savings for a simple reason that I just feel that the tax doesn't make sense. So for that reason, I won't. There are others who did make a withdrawal. When we asked them, how likely are you to withdraw? So they would cite different reasons. So I think to the extent that people appreciate the disadvantage they're putting themselves by doing so. But again, one would imagine that given the fact that, the two-pot system was at its inception, there was a lot of hype around it. I think over time, maybe people will soon realize that actually it's not worth it. Maybe I should keep it there. But we need to continue intensifying our efforts to provide financial education across the board.
Why are people withdrawing money from their pot? I mean, I imagine debt is a big issue.
So here's the thing, and I'll tell you what the people are saying, and I will also give you my opinion on that one. So about from our customers, I mean, 45% said Well, they withdrew to actually settle debt. About 18% said no, I withdrew the money to pay school fees. Others said no, I needed to pay my bond. That's 11%. 6% said they were drawing for groceries. When you look at some of the recurring themes, overall, we've had people saying, well, I had to lay by clothes for December holidays for my child. Others are saying, no, I needed to buy clothes for my children. Others said, no, well, I had to put money aside for my brothers going to initiation school. And others said, look, they want to buy tombstones and things like that. Those are other reasons people have advanced there. But I want to hone in on the paying off of debt, which is about 45%. That's the biggest number. Whenever you do surveys, you must always be mindful of some of the biases that creeps in, because people want you to see them favorably. So they would always project the image that they are responsible. So I think the claim that they withdrew this money to pay off debt, I think maybe we need to wait until we look at the financial statements of banks, for that particular tax year and say, financially, and say, are we hearing banks and other financial institutions saying they're seeing an improvement in their delinquent book? I think if we start hearing such stories, I'll start believing that it may be there's merit to that they had to settle debt. Yes, we've had others saying, I won't withdraw again because I've settled my debt. So I think that is something that we need to put an eye on. I'm very keen to see whether indeed that the money was used certainly to settle debts.
I mean, the risk is that people, yes, we're settling debts, but we're settling debts because I've gone and bought a car and that's the debt I need to settle, because I knew that this was going to happen. I think some people have had a nasty shock around tax. So you expect that you're going to get a certain amount out, and then you suddenly realize that actually SARS, quite busy little organization at the moment, are suddenly taking quite a lot out. And I think that must have been very tough for a lot of people.
No, absolutely. In fact, there's about 45% of members who told us that, look, the tax is too high. And this is the reason they cited why they are likely to preserve. But I think I must also highlight, Stephen, that people who are likely to withdraw are people on the low end of the income bracket. For example, when you look at people earning between 5,000 and just under 10,000, they are the biggest withdrawers versus those who are high income earners. So when we look at people earning, for example, from 75,000 to just under 100,000, those are the people who are least likely to withdraw. I mean, again, one can argue and say, well, I guess they earn more, so therefore they don't need it. But I don't think it's so much about it. But I just think the pressure is far higher for those who are earning less. So that's why we're seeing the biggest withdrawals from people who are earning between 5,000 and just under 10,000. But what was concerning for me was that almost 80% of fund members indicated that they are very likely to withdraw again. So which leaves us with about 13% who said they are unlikely to withdraw. The other ones may be the somewhat, but the 13% of those who are saying they're unlikely to withdraw, but 80% is a high number of people who are saying they're likely to withdraw. So I don't think the issue of tax has hit home for many of them. Others might say, look, I hear you, I'll be taxed, but it's okay. As whatever I get is okay. But I think people need to understand what it means in the long term.
We're speaking to John Manika this evening, the head of financial education at Old Mutual. I'd be interested in your stories, your views on the two-part retirement system. If you've taken money out, what you used it for. Maybe you know someone who claimed they were using it, who said they were using it to pay debt, but actually went and bought a car. Maybe the other way around. I don't know. But, has it actually made you stay in your job longer? Maybe. That would probably, I hope, be a very, very good consequence. 011 883 0702 and 021 446 0567. Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? all those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024.
The Money Show.
Personal finance.
John Manyike, Head of Financial Education at Old Mutual, with us tonight. Your stories, please, on 021 446 0567 and 011 8830 702 of the two-pot retirement system. John, the tax issue, which has caught so many people by surprise, that you have to pay tax on the money you take out. I think that the real sort of root of it is that people are not necessarily aware that they don't pay tax on what goes into their pension when they actually pay it in. Is there a bigger conversation to have around how people need to understand the tax that they pay on their income?
No, absolutely. I do believe, as much as it might sound controversial for me to say, that they to a large extent, there's a mathematical problem here, lack of appreciation of what it means, what these numbers mean, what will happen if you keep withdrawing, and really, that when you get taxed, when you withdraw, it's money that you've lost, but it's actually going to erode the value of your fund, and you're going to need every cent so that later you can benefit from the compound interest. I think these are the type of conversations that financial advisors need to continue to have with their clients. I think these are there are opportunities for employers to open the doors to financial institutions to come and provide this type of financial education to fund members, to appreciate what it means to benefit from a compound interest and how you can easily erode the value when you keep withdrawing. And also to remember, to keep reminding people that your retirement fund was designed to help us to replace our salary when we retire, and you want to try and max what you're likely to get when you retire. So in other words, when you retire, ideally, you need to keep what we call a 70% replacement ratio. So meaning at least 70% of your last paycheck should actually come from what your fund would buy you when you retire. And unfortunately, many people will fall way short of that number, which is just a calculation based on, assumptions that it's more likely to keep you afloat, to stay afloat and to maintain your standard of living. But here's the reality, Stephen. There are people who are going to retire still with some degree of debts. And yeah, we could be talking mortgage, we could be talking whatever cars they're driving. Yes, one might say, well, at that time, my children will be out of school. Some might still be at tertiary. But all those things, the reality will be different from one person to the other. And you need to just understand the numbers. So if you're uncertain, speak to your financial advisor.
Yeah, this really it sort of boils down to that, as so often. So if we try and sum up the reforms so far, do you have enough evidence to try and turn the clock back? Do you think this was a bad idea? We need to go back to where we were. And we mustn't forget, as a point I made earlier, that there were some very real problems with where we were because of the consequence of it, which is that some people were leaving their jobs because they wanted to access the pension money. I made the point at the very beginning, this is kind of a unique reform. We haven't seen it really in other places. So I would suggest that actually you need 10 to 20 years of data before you know if it's really a good idea. The withdrawals might sort of taper off a little bit. They might not. I know, John, that I think a bit like me, you're a kind of savings hawk, if I can call you that. And I mean that in the best possible way. I also want to save as much as I can for later. I don't always, but often. So I think that people like you and I kind of, geared to that to an extent. Our jobs make us like that too. Is it too soon to stop this? Do you think we need more data, or are you decided?
Look, I think we need to appreciate the fact that the decision had to be made because the situation was quite dire. That when people keep withdrawing, rather exiting and not preserving, and just literally withdrawing all their retirement funds when they resign. And so we were going to be sitting with a much bigger problem unless there was some kind of a reform. So I think for me, for now, the two-pot system may be a better angel compared to where we would have gone to if we didn't make the changes that we have done up to now. However, on the other hand, we still have a lot of work to do to raise a level of awareness of what it means to withdraw. So yes, it was said that, look, for emergencies you can, but human beings are human beings. I can make anything an emergency, so I think that level of discipline. So it will require a lot of concerted effort across the board to raise this level of awareness to the extent that people will see that there's no need to be withdrawing every single year. If you can avoid withdrawing, even better, you'll be in a better position. So it's a case of searching for a better angel and giving ourselves a best shot at providing financial education.
John Manyika.
In the process.
John Manyika, always good to hear from you. Thank you so much. Head of Financial Education at Old Mutual with Personal Finance on The Money Show tonight.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024.
Well, developments in the U.S. tonight. The U.S. President Donald Trump says he believes that Jerome Powell, the chair of the U.S. Federal Reserve, will be out in 8 months. 8 months from now is mid-March. His term ends in mid-May next year, which is 10, 11 months. So not entirely sure where Trump got the 8 months from. But that's what he said. The Dow Jones is up 0.27%. The Nasdaq is down 0.3%. The S&P 500 is up 0.06%. On that note, we will take our leave of you. Aubrey is next, and we will see you tomorrow. Lots going on, of course, at the moment. I wouldn't be surprised if it's a slightly busy day tomorrow. Good evening. It's 8 o'clock.